Well, as we approach the end of 2023, the NGX has experienced noteworthy achievements in two crucial domains, the banking and consumer goods. Despite market fluctuations, these sectors have demonstrated unwavering resilience and growth, displaying sustained strength and encouraging trends throughout the year. The consumer goods count year to date, that's up about 61%, while the banking index will see a big jump there. 97% year to date. That's talking about the consumer goods and banking index. Well, joining us now is Damilare Ashimiyu, macroeconomic strategist at AfriInvest Research and Consulting. Great to have you on the show. Happy holidays.
Yeah, good afternoon.
Yeah, so looking at both counters now, that's the banking and the consumer goods sector of the NGX. Currency revaluation happened to both and other sectors, but it seems it impacted them in different ways. Talk to me about this.
Yeah, thank you very much, Danny. So, broadly speaking, right, 2023 has been a fantastic year for Nigerian exchange. Like you rightly mentioned, the market's year-to-date return is in the region of 1.4%, which is perhaps the highest since 2020 when the market did 50% to emerge as the global best performer according to Bloomberg. So, in a few days' time, we'll get to know where the Nigerian market performance will rank globally, but I believe it will be among the top 10 given this outstanding performance. Now, looking at the two sectors you just mentioned, yes, there are actually a number of factors that shape the market this year, right? We have fundamental consideration of some parts because a lot of companies posted resilient earnings from 2022, which stimulated investors' sentiment. One of the drivers of the market is this FX revaluation game, which you mentioned. We also have cases of new entrants into the market, which added some values to the market capitalization. But sticking to the impact of the FX revaluation, right? I think it was more profitable, more favorable for the players in the banking sector than those in the consumer goods sector. You look at the banking sector, guys. You look at their revenue numbers, at least for the 9 months, you've seen many of them, nearly doubling their gross earnings. Using Zenith as an example, see gross earning increasing for about over 114% in 9 months, and profit also was in the region above 100%. So that shows the extent to which many of these companies benefited from the FX revaluation gain. As a matter of fact, we have banks like UBA that recorded more than 1,000% gain in terms of FX revaluation gain. So it was largely positive for the banks, and that already tell on the way market priced a lot of the banking tickers. Now, for the consumer goods sector, right, is largely a mixed bag. Depending on what the raw material source of the consumer goods company we are considering, what the source looks like. The consumer goods sector is very broad. We have those that are focused on drinks. We have those that are focused on raw food items. So if you look at the numbers of those in the brewing segment of it, those that are largely exposed to importing a lot of raw materials from using FX, 2023 is actually not a very decent year for them because they booked significant FX loss. We talk of a brewing giant like Nigerian breweries already booked over 40 billion loss as of 9 months. But when you look at it from the perspective of those in the food producing segment of the consumer goods, those that their raw material needs are widely acquired locally, right? Their ability to play along the dynamics in the macroeconomic environment, because 2023 also will be remembered as a year of high inflation in Nigeria. Inflation now at about 28%. Highest since 2005, means that consumer purchasing power was really affected this year. But one thing that most players in the consumer goods sector were able to do this year, which actually helped them in terms of their top line number, because if you sample 100 of players in that segment, right, more than 80% or even 90% had their revenue, increasing. So two things worked for them. First is that there was price action. There was price increases across brand level, and the fact that the producers in the consumer goods sector have adopted what I will describe as sachetization a lot of products have been redesigned to quantities that low and mid-income earners can afford. Things that maybe the non-standard size before was to be 1 kg. But because of their understanding of the inflation dynamics and now the purchasing power of consumers have become weak. So what they have done is to then create a lot of smaller sizes such that buyers can still stick to their By and large, it was more of a volume strategy in order to support sales.
Yeah, definitely. I see a lot of sachets now of most products that didn't have sachets before. It's quite incredible. But definitely 2023, not so bad for this counter. But what are you seeing going into 2024?
Yeah, so generally, Nigerian companies have actually, over the years, demonstrated their ability to be resilient, irrespective of what the macroeconomic environment is throwing at them. Yeah, 2023 came with a lot of shock. We have pre-election jitters. We have a lot of sporadic reform that was put in place immediately the new government came in. But I think 2024 will be more of a stable year and will allow businesses to better strategize. So, like for the FX switch in FX regime to crawling peg that hit a lot of companies badly. It was because in the scenario model of many of these companies, that was never captured. And so it hit a lot of them very hard. But in 2024, having learned from what happened in 2023, and given the fact that global inflation is also expected to moderate, which will also cascade down to Nigeria from the point of reduced imported inflation, and also expectation that on the domestic level, right, the government will then, will now have more concentration to focus on governance than politicking and every other thing that took center stage in 2023. There was distraction of the tribunal at some point, but now it's the time for the renewed hope renewed hope strategy rather to be rolled out. So we think that there will be a lot of stability in the macroeconomic environment in 2024 compared to 2023, and this should support performance of companies. Expectation around inflation too is a bit decent, though it's still going to be very high. So we expect inflation on average to moderate, at least on a base case, about 22.1%, which will be far better than this year, because inflation this year will likely average about 24.9%. So by and large, we think that companies will be able to strategize better. Cost pressure that hits them badly this year will not be there and next year, and it should tell on their performance.
Yeah, so much to look out for, and we know the major economies are already talking about possibilities of rate cuts going into 2024. But looking at our inflation rate, I don't see if that's in the cards at this point. But thank you so much. It was great having your perspective today. Damilare Ashimiyu, macroeconomic strategist at Afrinvest Research and Consulting. Thank you so much, and happy holidays.